morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In the equity price action, there's a huge amount of fear about a second coronavirus wave, and this has really pushed the Dow Jones futures lower today. How much? They are down by over 800 points. As you can see in the chart, the rally for the Dow Jones index is under immense amount of a threat because the index has broken two important moving averages. Now, what are those moving averages, and more importantly, on what time frame? Now, when you look at the Dow Jones index on a weekly time frame, you can see that the index has crossed below the 50 and of course the 100-week moving average. But when we compare the two indices, the US indices I'm speaking of, the Dow Jones on one hand and the S&P 500 index on the other, the S&P 500 index is still very much holding on to its gain. How so? The reason for that is that the index is still above its 100-week moving average and just slightly below the 50-week moving average. And if you really look into a lot more detail for the Dow Jones index, yes, the futures were down well over 900 points today, but it appears to me that the investors are really stepping in because they consider the current sell-off a huge opportunity for them to get back into the game. Why are they doing this? This is the major question. Well, the world is in a lot more better place today than it was back in March or in February when we got really hit by this coronavirus. How so? A large number of countries around the world, they have already controlled the coronavirus situation. Yes, the measurements taken by the US were not that effective, hence the first wave of coronavirus wasn't really controlled. But again, that argument doesn't look that strong when we look at what is taking place in terms of a coronavirus over in China. Because over the weekend, we had over 80 cases of fresh new coronavirus emerging in Beijing. Now, of course, that increases the prospects of, with the Chinese authority, with this militant approach, if they are going to shut down the entire Beijing, which is one of the main provinces over in China with respect to the country's GDP growth. So obviously that is going to have a detrimental impact on the global supply chain as well. So I think it is that particular factor which is really impacting the risk on sentiment in the markets today. Now, speaking of risk on and risk off, I'm not seeing any bids coming when it comes to the safe haven assets, and I'm really speaking of gold over here. Perhaps there is a concern among investors that we could see a repeat of what we've seen before during the COVID-19 sell-off, and that is that perhaps institutions may have to sell their positions once again in order to ward off the situation under which they can face margin calls from, obviously, from their brokers and from other institutions. As for a black gold, and I'm speaking of really crude oil and Brent oil prices, they are down well over 10 and 12%, as you can see in the chart, from their recent high. And if you look at the price for a crude, it is trading in around $36 now, and it is likely for the prices to consolidate or continue to move lower from here. And again, we talked about this in previous videos, that when it comes to crude oil prices, they moved too fast and the move was too furious to the upside, while the underlying factor, and I'm speaking of really demand over here, wasn't really supportive of the move. Hence, a retracement or consolidation was very much the base case scenario, and that is what we have really experienced in the market. That's all for today. See you guys tomorrow.